Good afternoon, everyone, and thanks for joining us. This is our second webinar on the consumer duty and issues related to financial technology and new technology to ensure consumer protection and how Fintech can advance the application and implementation of consumer duty. Today's keynote speaker is Sam Hatley. I'm going just to pass on the floor to him, who is going to introduce himself and then talk to us a little bit more about one of their new products. So over to you, Sam.
Thanks a lot, Karim. My name is Sam Hatley. I'm CTO at OnLadder, and as you can imagine, we're a startup, so the title does not always accurately describe exactly what I do. My responsibilities have largely been around demonstrating and expanding our governance suite, our policy suite, and a lot of the direction that we've had to go into in terms of consumer duty. So what I would like to do is kind of go through a very brief introduction of who we are, what we do, and what we've done in the context around consumer duty, and then take some questions and answers later on. Let me pull up some slides here, if you don't mind. Fantastic. So just to kind of give you an idea of what we'll be talking about, I'll give you a brief background on OnLadder, what we actually are, and the background around the product. We have one major product that we've been in the works for a while. We'll talk about how that product has influenced with the consumer duty and what kind of challenges and opportunities that's come across. So my name is Sam Hatley. As I've already told you, I'm the CEO and co-founder of OnLadder. I helped co-found OnLadder about 3 years ago with Cameron Orcutt, who's our CEO. And as over the last year or so, we've also been lucky enough to have Jackie Bennett on our team as a non-executive director. Our product is mostly an OnLadder, is called the OnLadder loan. It's this is a very technical description of what it is. It's a second charge equity loan to supplement a home buyer's deposit. And let me try to unpack that a little bit. We're not the primary mortgage lender. So if you're using an OnLadder loan, you'll be taking a regular mortgage from, say, NatWest or Nationwide or Lloyd's, and using that in combination with OnLadder, which will provide you another portion of debt to help you afford the home. So at the end of the day, when you actually have your loan, you'll have a 95% loan just out of two different portions. So your traditional first charge loan and the OnLadder loan, which sits just underneath that. And what we're doing is called an equity loan. So instead of owing you 100 grand when you take a loan, we actually you would owe us 20% of the house, or however much you'd actually borrowed from us in terms of the home's value. It's a little complicated, but I'll go over it in greater detail down the road. But ultimately, our goal is to help first-time home buyers get better homes more quickly. We're trying to plug the gap that's been left by Help to Buy exiting the market. And we're trying to do that in a way that's more flexible than Help to Buy was. So we're offering this loan in secondhand properties and on new builds as well. So just a quick overview of what this looks like is when you buy a house, we'll provide a deposit top-up loan to the first-time buyer or a buyer of a home. And they'll make low interest-free payments each month. Because we're an equity loan, we don't actually charge any interest for our loan over the life of it. And at the end of it, generally our goal is for when the home buyer sells to move up the housing ladder or to remortgage, they'll use the equity that they've built up over time to pay us off as well, so they can move on to just a single loan. So that's what the product that we have. That's what we've been working on this entire time. And the context that we had before the consumer duty came in place, we were already in the regulatory process. So at this point, we'd already had adopted policies and procedures around that we would have to tweak to make fit the consumer duty. And as you can tell, this isn't exactly a traditional product. It can be a little bit more complicated to explain because consumers, when you have a mortgage or you're looking for a mortgage on a home, you have a certain range of options that you expect to actually have from a mortgage. So explaining what we do and how we do it in a way that's concise and easily understandable to a customer, it can be challenging, but it's of the utmost importance to us to be able to do that in a fair way. And luckily, at the beginning of this, because we had Jackie on our board, who's been so involved in the customer duty with her experience at UK Finance, we already had somebody who was championing this measure from day one. So we had a strong background around how we could actually implement this. Just kind of a background as to what the consumer duty is. We tended to focus mostly on the outcomes in when we were actually planning this law. Sorry, just give me 1 second. We were focused largely on the outcomes, and there were 4 outcomes that we really had to pay attention to here. One was products and services, which is essentially making sure these products are designed to meet customers' needs and we are hitting the right target market. Price and value, so ensuring that the product is priced in a fair way, and this includes both the monetary and the non-monetary costs. Whether the customers can actually understand what they're being offered, and whether we can provide enough support. So these are all of the outcomes that are really key to effectively implementing the consumer duty. And I'll run you through these one by one. The first one here is really the products and services outcome. This was kind of a key source of inspiration for us as we were moving into it. Because we are a startup, obviously we had a target market, but when the new regulations came in, we realized that our target market may not have actually been granular enough to meet the definition. And consumer duty gave us an opportunity to really fine-tune what our target market was and understand the very particulars of what our customers and who our customers really were. So that was a major boon to us at the very beginning. Part of this outcome also required us to incorporate qualitative and quantitative information within our product testing methods. And while we had been using a lot of qualitative information from day one, it wasn't documented as sufficiently as our quantitative methods. So as we changed our processes to incorporate the consumer duty, one of the things that was really important to us was getting more qualitative data, doing that more quickly, and presenting that in a format that was much more comprehensive than what we had done in the past. Further, now that we actually had a target market that was very, very highly tuned and we had tested the product qualitatively, we also really took steps to make sure that we were distributing the product properly. We wanted to make sure that because of the product's complexity, it was distributed through mortgage brokers, and we made the conscious decision to not try to advise on this product ourselves or bring in mortgage brokers within OnLadder, but instead rely on existing, experienced, regulated mortgage distributors who could adequately advise on the product to customers that would need it, rather than trying to do that on our own or market the product on our own. And that's been very helpful going forward. I don't suppose you guys have any questions at this point? Okay, great. So moving along, talking about the price and value outcome, this is typically one of the harder things for a lot of companies to understand, because fair value tends to be kind of a broad term. And this was also a major point for us that we had at the beginning to figure out a definition of what that fair value was and understand how we could present that in a way to customers. And further on, we had to make it systematic, because this value assessment wasn't something we could just do once and forget about it, because conditions changed and what the actual market of the loan may change over time. We had to make sure that we were constantly going through and understanding whether this loan was continuing to provide fair value to the customers we intended to provide fair value to. So creating a method of actually understanding how and whether that loan is of fair value, that was hugely important. And on top of this, it's also understanding what non-financial costs were part of the loan, which we've been trying to minimize over time as we've been going through this. And in terms of customer understanding, as I said earlier, this was a huge and clear importance. And in our view, the customer understanding outcome really comes in place with what was already around the clear, fair, and not misleading rules, which is So now the same rules could read communication should be clear, fair, not misleading, while supporting customers to make effective, timely, and properly informed decisions. So really to meet this, one of the things that we had to start thinking about doing was generating tailored communications, but not just tailoring things that we sent before we sent them, but generating the things before we actually sent them out. So we would understand, we would have prompts and we would have communications that were developed at the adequate time throughout the mortgage contract. So for example, we have communications that are designed before the product is actually sold, so customers can better understand what the product is. We have communications that are designed during the life of the loan to ensure the customers are still able to make their payments and their situation hasn't changed over the life of the loan. And because partially thanks to consumer duty, we're making sure that all of these communications have been tested and pre-planned and are in place before we ever get anywhere close to needing to actually use them. On top of this, one of the things that we've had to do is make sure that these communications are correctly monitored, so that even if we do run through all of these focus groups and going through the time to actually test these communications with experts and with focus groups, that we're actually understanding what the customers do really understand what we're sending them, or are interacting with what we're sending them. And again, documentation is absolutely crucial in all stages of this, that we're actually ensuring that customers understand this, we're monitoring this correctly, and that we're continuing to make improvements over the life of our communications programs. Customer support was a little bit more of a North Star for us in a lot of senses, because we aren't actually operational at this point. We've been in the regulatory process. So the benefit for us has been really looking at what consumer duty is suggested as a minimum standard of support and looking at that as a North Star of what to hit at the basic or exceed in all cases. Because of this, we've taken the time to actually introduce a bit of friction into our purchase process, looking at waiting periods between sending information out, and so that customers will actually have the time to spend time thinking about what the decision is and understanding the materials. And really, as part of that North Star, in just ensuring that we have the same level of support at the beginning as we would at any stage throughout the loans, so that customers can comfortably and easily be able to actually use and enjoy the products that they have. And monitoring, again, becomes a huge consideration at this stage, because those systems need to be as automatic as possible so we can actually evidence them. Outside of this, the customer duty doesn't end at the outcomes. We also had some other considerations that we had to go through at each stage. One of the things that we've done over the last couple of years that may not be as typical, but we've really tried to blend what we've had with customer outcomes with what was already existing with treating customers fairly. Those two policies naturally complement each other, and one seems to be an extension of the other. So a lot of our direction has become much more focused because, as a result of customer outcomes. Monitoring and evidencing, if you can't already tell, has been a huge priority for us. And then we have to go through and actually reflect those changes in our governance. As for the things that actually were fairly challenging into implementing consumer duty, a big one has been really trying to define what some of these broad terms are. Good outcomes and fair value, these, in my opinion, have been left deliberately broad by the FCA, because it is something that changes over time, and it is something that allows us to kind of get a general idea of what the context is before we can actually define those. Further, there was a real lack of historical context surrounding the consumer duty, whereas with other laws that we had to try to meet, there wasn't too much actually surrounding it. There wasn't as much discussion or white papers, the sort of things that you would use to reference when you're actually looking at a law and how it's been implemented. It just did not exist. Effective data management, because we were implementing all of these new monitoring systems, has become a huge priority, and it is a real challenge. And all of these informal processes, they really require a lot of documentation, which is absolutely burdensome from a data management perspective. That being said, the fact that we actually have those formal processes in place, it's been a huge benefit to us for demonstrating how we actually comply with consumer duty and other elements of our regulatory burden. As I said before, consumer duty has represented a massive North Star in terms of what kind of quality we should really expect to give. And it's given us an opportunity to really go through every element of our own policies and standardize them as we've gone through them. And again, I don't think we've been doing this poorly in any sense. We're very much a customer-centric company at the very beginning, but consumer duty has really allowed us to even push further towards being customer-centric. So in terms of key takeaways, really, from our understanding of customer duty, it's every action really must be customer-centric to properly comply with the duty. And proper monitoring and evidence is difficult in these stages, but it's been really crucial not just to comply with the duty, but to understand what's actually going on with our customer base, to understand what actions we're taking that are working, that are not working, and what we can probably do better. And kind of an obvious one, but one that I've been thinking about quite often after going through the customer duty is that you really just need to read the regulations in a lot of senses. That I've had many conversations with people who knew the law very well and were mistaken. I've had many conversations, I've read many papers from people who should have known the law very well, but also didn't have a full picture of what was going on. Actually understanding and reading the regulation as it is has been a huge benefit to us. That's basically it for the Q&A, and thanks for listening to me drone on for 20 minutes there.
Oh, thank you, Sam. That was really interesting. And I think one of the really significant things about this discussion now is that your product actually is embedding the duty, you know, in its design, rather than having already kind of a product and then reflecting on the duty and then thinking, how can I use, you know, how can I make my product compliant? It's more of a, you know, you're building that duty within or building the steps needed to comply with the duty within the product itself from the outset, which I think, you know, would really enrich our conversation and the purpose of having these webinars, because we really want to know effectively how the industry is viewing the duty and what they're doing to kind of embed or at least comply with the duty. But in your case, it's more like, you know, building it in the product itself.
Yeah, it's actually kind of an interesting place to start from too, because in some ways it's much easier for us to embed all of these elements in there because we are such a small company and our governance is much easier to navigate. But at the same time, because we don't actually have all of these processes built up, it does raise the bar and it does introduce its own complications.
So certainly, it comes with many challenges as well. I know it might be, you know, more beneficial, but certainly, I'm sure, you know, it comes with certain challenges. As you rightly identified, the duty as very consumer centric, and in a way, it's driven by, you know, what the outcome. It's outcome based to an extent. You can describe it as an outcome based sort of duty. And I think I found it quite interesting when you start talking about these 4 outcomes you identified, and we talk about them in quite sort of detail. I'm quite interested in kind of getting the industry's views on what fair value means to you. Like, you know, when you're designing this product, you know, for the consumer, I can think as myself as a consumer, what fair value means to me. But surely, you know, you're a commercial entity, but at the same time, you're committed to, you know, the sort of being consumer centric, as you put it. So I'm just quite kind of intrigued to sort of get a sense of how you view the meaning of that from an industry point of view. What's the definition from, you know, that's influenced what you do in that structure in building that product?
I think that's kind of a short answer to a long answer to this question. I mean, the short answer is really the benefits that a product provides much match the price that customers are paying. But really, our internal definition of what fair value is, we've left it deliberately broad and deliberately vague because the context surrounding fair value is always changing. I mean, look at the context of the market now versus 6 months ago. Mortgages are priced at a level that absolutely, if they had been introduced 6 months ago, they could not be, in most cases, they could not be said to be providing fair value because the context has changed so much. So really for us, it's about understanding what comparable products in the market are charging, and if we're providing a similar level of benefits for the same price or a different price, and if we can actually justify any sort of differences that we have there. It's the justification that's really key. And a part of that one problem with this approach is because we are a novel product, nobody is doing exactly what we're doing. So we do have to spend a lot of time looking at what other companies that could be described as substitutes are doing. This could include high LTV mortgages, or there are some other companies that have been trying to do deposit top-up solutions as well. What do they charge? Are the benefits similar? So it really does become a fairly qualitative exercise in a lot of ways. And yeah, it's really been an interesting exercise.
I think, again, it's related. My second question is quite related to this point and what you also identified as, when you started looking at the market, you tried to look your target, or not target, but like your potential market and individuals. And you talk about, identifying those first-time buyers, but also and trying to sort of not limit this like the government scheme to new build, but also second sort of hand or properties. But you mentioned that you look at real needs. So what would that be? I mean, what are these sort of needs, and how you kind of, gauge these needs? What are the things that you effectively looked at in terms of, identifying your market and addressing the needs of the buyers? Because to an extent, that what the duty is one of the outcomes is the value, is whether it's not just fair value, it's delivering on what the consumers are sort of trying to achieve by buying this particular product.
Yeah, absolutely. No, I mean, this has been something that's happened from the very beginning of our product. I mean, we have made changes, fairly significant changes along the way, just because of the result of our conversation with customers, which has been really the guiding principle that we've gone from day one. So really, to find out customers' needs, it's been an act of talking to customers. One of the reasons we are the product we are today is because we talked to many customers who all told us that the one element of buying a home they really desperately struggled with was the deposit. And they didn't have a whole lot of options to actually do that. So focus groups are helpful. One-on-one conversations have been very, very helpful in all stages of our product. And no matter who you talk to, you get a slightly different perspective. I think in the future, we're also looking at incorporating more survey data that we're actually going to look at contracting ourselves. But those one-on-one conversations unearth just an absolute richness of data. And that goes for all elements of every stakeholder that's attached to us.
I guess then it's the key point is communication and engagement, which again leads nicely to my third question, is on the point of communication. Because one of the things that I've come across in my work on high cost credit, and when I speak to credit charities, institutions, that supports consumers who are struggling, one of the key things that they, that keeps kind of coming up in that conversation is communication, how information is being communicated, and what what communication means and how communication works. So how I mean, what sort of what have you done to make communication effective? Because again, one of the things that's always been an issue is we actually don't, consumers don't quite understand the product, and sometimes, if they understood the product, they would not be having this conversation with the charity, the advisor, talking about the problem. So I think again, it's important to sort of get a sense of how you make your communication effective.
Yeah, no, that's absolutely one of the things we're trying to avoid at the most, is getting into a situation where a customer goes in with one of these loans and realizes they didn't understand it at the beginning. So we've actually gone through a multi-stage process. I mean, every one of our communications we've designed, we've started out with we have several experts in marketing. We have several experts in the regulatory spheres. Then we've run it through several mortgage brokers as well before we actually take these communications to customers and try to understand whether they work or not. It can be difficult to source enough customers to actually get a wide range of feedback on it, but every time we've performed an exercise like that, we've managed to find mistakes or tweak things in a way that's made things more understandable for customers at the end of the day.
So, I mean, again, is something related to communication. I mean, do you envisage a role for like a technical solution, an AI base, or a product that can help with that in that respect, or
Absolutely. I think that's going to be a really important thing going forward, because every element of our communications needs to be put in front of people who may actually be in our target market. Finding those people is difficult, and there aren't many tools that I've seen out there right now that actually allow you to source customers to look at materials that you're putting in front of them. So the moment a tool comes out like that, we would be using it.
Right. Again, one of the things that you mentioned, I found quite interesting. You didn't just talk about, you mentioned qualitative sort of data, which I found quite interesting. I'm not the one who can really handle, the quantitative numbers, but with the qualitative data, what was your approach to using qualitative data, and which state of the operations that it was sort of collected, and what kind of data, how do you conduct the analysis, what things you looked at in that sort of context of the use of qualitative data? I know it's a very broad question, but yeah. I think it's really interesting because normally when you talk to sort of financial institutions, it's all about the sort of the figures, the numbers, but this is beyond numbers. This is more probably something that's said, or something that's been, sort of a kind of, an approach. You kind of thought, well, this is obviously the number of consumers who spoke to that approach to this particular sort of product or presentation. So how do you, what was your approach to capturing, gauging the qualitative data that you kind of mentioned in your presentation?
Yeah, absolutely. No, in a lot of ways, our methods improved over time as we did this over and over again. But at the beginning, we were sourcing whoever we could. We talked to a lot of people within our own network, and we asked them if they had friends. We talked to their friends. That was really it during the stages when we were really bootstrapping things. These days, we have a little bit wider reach, but it's been generally, we try to explain the situation and get very, I guess the short way of saying it is when we're talking to customers, we try to hold off on explaining the product for as long as possible, because we really want their take on what the market's like, what it's like to be somebody who wants to buy a home and hasn't got there yet, or has bought a home and is just dealing with the early stages of that. So getting as much information before they actually understand what we are and what we're trying to achieve is really important. And then we can try using our own materials and things that we've developed over time to explain the product, to explain the product to the customer that we're talking to, and get their opinion on whether they would consider that a reasonable price, what they would expect to see the added or removed from the product, what elements they like, what elements they don't like. All of these things really add up. But I think the key thing in all of this is I can't tell you exactly what information we're looking for from the customer, because the information we're looking for is almost always open-ended. And the more surprised we are, the better the kind of feedback is.
Right. I suppose then that is not just kind of, fed into the structure of the product, but also probably play the role in the communication, sort of finding better way to communicate. Is that like a fair assumption in terms of, getting that information and then trying to test and understand how they react to sort of,
when we're testing our communications, yeah, that's absolutely part of it. When we're talking about the product itself, that's more or less what I was describing earlier. It's very open-ended. But when it comes to communications, it really is about whether the communications are understandable or not. Then understanding later on within the conversation whether the customer actually has understood what we're talking about or not.
If I may ask you another question, if that's okay.
Please.
When you know, in any financial product, there's always, you look at a market and you try to identify your market, and then you want to make this product as accessible as possible, right? But at the same time, you always have, it's part of the duty as well to ensure that actually those who are taking the product are capable of, it is the right fit for them. It's not just the value, it's whether that's what they need. So how do you balance that? So in terms of the accessibility, making sure also that this is something that should be, that this is the right fit for this particular sort of consumer. I think that's to an extent is what the duty, it fits within that sort of broader context of the outcome kind of, driven duty. So how do you, do you balance this and to, how would you be able to describe your product as flexible as well, and where the flexibility comes from? So kind of 3 points in terms of making it available, but at the same time ensuring that it's the right individuals are taking that product, and at the same time looking at the flexibility of that product should circumstances change. So I think that would be quite interesting to sort of elaborate on, if that's okay.
Right, and I think the kind of accessibility you're talking about can take on a lot of meanings, but chiefly this is one of the reasons we've spent so much time working with the mortgage brokers and experienced professional mortgage intermediaries to really understand what the best kind of customer is for our product. And it's also been a huge part of us further defining and granularizing what our target market is. So we are only hitting customers that we've seen would benefit from this product. That being said, from the day when we tried to build a product that's accessible as possible for a wide number of groups. I mean, one of the things that we've done from the beginning is make sure that the payments involved in the product are incredibly low compared to most other mortgage products. We don't charge interest. Most of this is built up into the home, which happens as you're building equity in your home. You'll be able to actually build up the equity that you need to pay the loan off. So when you actually go to repay, you've already put a lot of that away.
Right. I think we've got a question that do you think the consumer duty will hinder fintech innovation? That's very broad, but
I think that is kind of a broad question, and in some ways, all regulation ends up being kind of a double-edged sword. It does its best to keep bad actors and unscrupulous characters off the market, but it also does that at the cost of hindering some of the most innovative products on the market. I don't think this is a bad thing. I think a lot of the products that are coming out of the market that are stopped by the consumer duty are probably products that shouldn't be on the market to begin with. So having these kinds of regulations in place, it's absolutely a high bar, but to be able to lend to a regulated market in this way, you need to be able to cross a high bar.
Yeah, I agree. I think you need to have that sort of regulation in place, and as you said, there are certain players you don't want to have in the market, and if that's stopping them from becoming part of that market, then I suppose that's not a bad thing to happen. I know maybe you're not the best sort of location, but do you have any quick questions or anything to? No?
Yeah, no, I just say thank you, Sam. I think it's I think it's very important to really think about how the mindset that new innovators have when it comes to the positive influence of consumer duty. I think that's something that's not discussed, and so I think your talk really brought that out for me, that you're coming up with something new in the market, and actually this duty, I like what you said. Actually, if you can't comply with the consumer duty, probably you shouldn't have that solution on the market, because it's most likely going to harm consumers. I absolutely 100% agree with it.
Yeah, thank you guys very much.
Right, so I suppose if we don't have any more questions, I just want to thank you, Sam, for a really, really interesting presentation and very innovative product, and thanks for answering all my questions. So that brings us to the end of this webinar. Thank you so much. Appreciate it.
Thank you guys both.
Thank you very much, Sam.